Hello traders, Gary Wagner here, just about 9:45 in Honolulu, 3:45 in New York. We've got roughly an hour left in trading in U.S. equities, and we do have a firmer market as we go into the first day of trading this week, March 21st. 2016. Dow Jones currently off of the highs, but still trading higher on the day, up about 14 points at 17,616. The low 551 and the high 644. So about 30 points off of the high today. S&P's also tracking higher on the day. They are currently trading up about 3 points at 2040. Now it's traded to a low of 31 and a high of 44, and we did send out a special trade alert this morning, and that was to recommend that traders that are long our E-mini S&P were long from 1979 to go ahead and move your stop up from where it was to just under a 2011. And we'll talk about the details of the stop and our basic targets and exit strategy all on today's daily report. So traders, I did send out a special trade alert this morning recommending that you trail your stops up. They were below 1997 to below 2011. Wanted to show you why I am placing the stop where we are. Obviously, we want to continually tighten up the stop as the market continues to move higher. Now, the rationale for placing it below a 2011 is in essence what we're doing is placing it below our 200-day moving average. And in this way, one, we've locked in a little bit more profits. But more importantly, if the market continues to rise and actually can break above this particular resistance area at about 2043 vis-a-vis the E-mini, well, then we'll tighten it more. We might even consider adding a position. However, our stop being moved up to this point locks in some pretty decent profit, irregardless of what the market's going to do over this next week. So traders, as for our exit strategy, what I'm looking at is as follows. We have, I believe, identified the fact that during this August meltdown, we had an interesting pattern that formed, which is in essence a W, and the W took us close to the record highs that we got just a few months prior to that, but well above 2100. And traders, I absolutely believe that we have identified a very similar pattern that exists in the market today, which is that W once again. And so if the market can break above 2043, and that's currently where we are pegging our resistance at, I believe that we could see that pattern repeat itself and have U.S. equities make a stab to that $2,100 area. So our strategy is simply to tighten stops, and if the market continues to move in our anticipated direction and breaks through this resistance area, and that's the real key right now, I think we've got a real shot to see this market run to about 2100. However, if we hit a stone wall, in other words, if we see resistance come in this area and it backing off, then we're looking at a different scenario, but that's what our protective stop is there for. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.